I think for OpenAI, that's actually a very brilliant strategy. So that's how they could get to become very, very large in valuation, would be to become so pervasively relied upon, and where they take such a minuscule take rate of their participation in you building a company, that could be really effective for them.
Like cloud computing, right? Like we're going to just take such a small tax. Yeah.
No, that's not a small tax. That's a large tax.
That's the picks and shovels play in a way to create the developer ecosystem for AI. And Chamath, to your point, I mean, I think you raise a good point that, what was their motivation to take such a dilutive round, the 10 billion at, what was the valuation at 30?
30, yeah.
Yeah, and does that imply that they're not confident? I mean, the flip side of it could be maybe they know they want to compete on the basis of rapidly, becoming the developer platform. And so they're going to subsidize that developer platform, with negative gross margins for some period of time. And maybe that's why they need a lot of capital.
And they were in kind of a reflexive loop of just cost of getting better versus the amount of money they had to get better. And so maybe they were forced to do it. And then in that point, how would you justify it? You would say, well, the other 50% is still hugely valuable, so that's enough for us. And I think that's very logical as well. We haven't given enough time for a logical framework of investing to develop, which also is tied to a logical framework for entrepreneurship to emerge. We're just way, way, way too early. So the thing with all of these language models is that they are grist for the mill. And we talked about this before. If it was a highly proprietary asset, you would have never sold 49% of it to Microsoft for $10 billion because you would assume that it was worth $1 trillion. So it's a huge tell on the part of OpenAI, their deep understanding, and they understand it better than anybody else, that it's a bit of a capped upside. So what is uncapped, I guess, is maybe the better question. Well, if you look at the 1849 gold rush as an example, the people panning for gold, in my opinion, are the people building language models today. They're going to come and they're going to go. But who's going to win? Well, the pick and shovel providers won. Levi Strauss won. So what is the equivalent of that today? I think it's at the silicon layer, because you need to really re-architect how compute will actually work in a world of all of these models. Those folks will get paid. If you look at AMD and NVIDIA, they've been getting paid for years. They continue to get paid. They probably will continue to get paid even more. And so folks that actually take a step into doing something hard and difficult in AI, like custom silicon, could get rewarded. And then there's what I call the white truffles. What are these unique alba white truffles? These singular sources of data that, when used in reinforcement learning, make your output just zing. And that's where I think Facebook is an obvious white truffle. Quora is a white truffle, but there are a lot of startups that could become white truffles if they gather enough data. And that's like a pretty reasonable framework.
Item one on the docket today, there is just a massive AI FOMO frenzy going on. Economist published a piece this week about the insane fundraising in the generative AI space. This is stuff like ChatGPT, Stable Diffusion, you've heard these names. And there are now 500 generative AI startups, according to this report. That tracks with what I'm seeing in the early stage. And not counting the OpenAI 10 billion from Microsoft investment, donation, rev share, round trip, whatever that is. They have so far collectively raised more than $11 billion. The article included this chart, which you can see if you're on our YouTube channel, and just tons of folks working in audio, image, and text. So we're basically looking at the multimedia, basically revolution of PCs in the 90s occurring again, and a complete platform shift.